To talk about the Strategic China Panda Fund, we're joined by portfolio manager Lilian Co. Lilian, begin by telling us about the fund, what its aims and objectives are. Give us an overview of it. Presumably it doesn't invest in pandas.
No. But panda is a animal that is pretty unique to China. So when we use panda, we think if people read panda, they would intuitively relate that to China. So we think that's quite a good name for China Fund.
Sure. So explain for us what it actually does, its aims and its strategy.
It is a UCITS long-only China-focused fund. We benchmark it against MSCI China Index. So basically, it is designed to produce long-term stable growth, but at the same time to outperform the MSCI China Index. Just quickly on the investment philosophy and our investment process, we are GOP investor. We look at growth at a reasonable price, and we are pretty much a bottom-up stock picker, but we always have a macro overlay when it comes to portfolio construction. So basically, we combine macro and bottom-up research in doing this portfolio construction.
You've been doing this since 2008?
Right, the fund was launched in October 2008. Actually, that was a horrible time to start a fund normally, as we all know what happened back in October 2008. We had this once-in-a-lifetime financial crisis. Yeah. But it turned out to be good timing for the fund because it actually demonstrated to investors that we were able to ride through tough times and delivered a good performance to investors over a complete cycle, I would say. We have been running this fund for 5 years now. So we have a track record that sits through ups and downs. It actually allows investors to actually have a good look at us as a fund that steered through a complete cycle.
In the growth story of China, there are a number of market peaks and troughs. Does your performance remain consistent over that time, or does it follow the peaks and troughs?
Well, I think the cyclicality does actually play a part in our portfolio construction, and hence it does affect our performance over time. As you can see from what happened in China in last few years, we did have pretty big ups and downs. In 2008, market was down like 50% and even 70% at one stage. And 2009, it was up 50%. And 2011 was another terrible year in China, market down 20%. And last year was up 20%. This year, down single digit. So I would say China so far has been quite cyclical in nature. I mean, I'm talking about the equity market. Although from a macro point of view, GDP growth is always at a very high level. I think this is something that investors must pay attention to.
But you're happy to work with that volatility?
No one likes volatility, honestly, but it's something that you just live with. When it comes to investing in China, it's just a part of what you accept when you invest in China. But I think in the past, investors bought China because of the high growth. But from now on, the same mentality cannot hold. But it doesn't mean that the China story is over. Like you mentioned, it's still growing at around 7 to 7.5% GDP growth every year. It's still a respectable growth, but I think investors will just have to adjust their mentality, that's all.
Now, we understand that the Strategic China Panda Fund operates with LBN advisors, your company as the appointed investment advisor, and E.I Sturdza Strategic Management Limited as the investment manager. Can you provide some insight regarding the parties associated with the fund and what services each of those provide and what advantages there are in having it set up this way?
Right. Basically, the fund is I would say, a fund with E.I Sturdza as the investment manager, and I am the financial advisor to the fund. And E.I Sturdza is responsible for marketing, distribution, and operational oversight, which includes risk management, etc. As for my role, I'm pretty much focused on portfolio management and research and such. So I think this is actually a good division of labor between us and E.I Sturdza.
Is it just you, Lilian, or do you have a team working with you?
Right. Yes, we do have a team. I have 2 senior managers and 2 assistant managers who help do the research for me for the fund. The 2 senior managers have experience in asset management for around 9 years. Actually, one of them used to work with me at Baring Asset Management. He was my analyst back then. He actually rejoined me last year. So one of the managers is actually someone that I've known for a long time. And the other senior managers, he had been with me since 2009. In fact, I think he's the one who has been in this team for the longest time. He also came from a buy-side background. As for the assistant managers, they both came from sell-side background with around 5 years of experience.
Quite an experienced team then.
Yes, I would say so.
So how do they actually work with you?
Right. Each of them covers 3 to 5 sectors, and they put their conviction ideas into hypothetical model portfolios. They don't just give me an idea. They actually have to write an investment report on the ideas that they put into the model. And we actually have a stock template that lists out all the topics that need to be addressed. So it's a very standard template. They actually present their ideas in a weekly stock meeting before they put the ideas into the model. So it's a very, I would say, systematic approach that we have with the model portfolio.
So then what happens?
At the end of the year, 50% of their performance is evaluated based on their model performance, and the remaining 50% comes from their contribution to the real portfolio plus the day-to-day work. I think it's a very good system.
But it's you that actually makes the final portfolio decisions.
Actually, yeah, after all, I'm the portfolio manager, so I have final say on what goes to the real portfolio, but they have the say on what goes to the model portfolio.
Where are you based, Lilian, and how often do you go and visit the companies you invest in?
We are based in Hong Kong, and we do company visits vigorously. For myself, I basically see 3 to 4 companies every week, either in person or through conference calls, and it's the same for my team members.
Large cap, medium cap, or small cap in the fund?
I say we are always biased towards mid to large cap. Small cap is something that we invest into, but because of the liquidity concern, they are never a big part of the investment. But today, small cap accounts for around like 15% of the fund. I think is a good level.
The stock selection process then, Lilian, how do you go about deciding whether to buy or sell, and how do you monitor the positions in the portfolio?
In terms of the stock selection process, we usually go for 3 source of ideas. First is try to identify the secular trend in China, and then you pick the market leaders or the consolidators of those sectors that you see secular growth trend, because they are the ones who usually gain market share over time. So apart from secular trend, we also look for contrarian ideas in overcrowded trades. But of course, contrarian ideas is not something that you get across all the time. I mean, consensus can be right, but when a consensus becomes too overcrowded, it can be a contrarian idea. We also look for unloved stocks as a source of idea generation, because unloved stocks tend to be ignored by investors at the early stage of turnaround. And usually investors are very skeptical when these unloved stocks have a turnaround story. But that's exactly the time you see the biggest mispricing. So that's how we look for ideas in the stock selection process.
And the monitoring of the portfolio positions?
We set target price for every stock we have in the portfolio. If a stock reaches our target price, we review. We may take profit if we think it's already fully in the price, but we may revise up the target price if we think that the stock still has more leg to go after the review. But I think it's more the review that's the key.
Do you have a favorite metric that you use when you look at the portfolio?
I guess the fundamental analysis is pretty much the same for most managers. I don't think we have any secret formula, but I think in the end, what's the key is the surprise. Do we see surprises in a stock price? Do we see a re-rating catalyst that is about to be unlocked? I think at the end of the day, share prices react to expectation. So it's really a change in expectation that we look for before we invest in a stock.
Summarize then for me what you believe is the future in China and how your strategy is going to take advantage of that.
Well, I think we are seeing a big trend developing in China. We see new economy being emerging leading sectors in China, whereas old economies that are geared towards fixed asset investment are likely to be under a structural derating trend. China is now slowing down, but that is a slowdown engineered by the government because the government wants to undergo structural reform. And when you do reform, you sacrifice short-term growth for long-term gain. And that's exactly what China is doing. So we are not too worried about this growth slowdown like some other critics saying, oh, hard landing. We don't think that's going to happen because the government strategically wants China to slow down. But when you are going through a structural reform, we are likely to see opportunities and threats happening at the same time. The government wants to shift China from a fixed asset investment focus to a consumption-focused economy. So like I said earlier, sectors that are exposed to fixed asset investment are likely to be derated structurally. So that includes commodities, capital goods, and basic materials. And also sectors that are enjoying monopolistic profit are also likely to be under deregulation risk because the government would like to have a redistribution of wealth from between sectors. And so what do we see as new economies in China? Obviously, internet, technology are new economies in China. We also think environmental plays as new economies in China. Environmental protection was something that the government talked about in the past, but they were never really serious about it. I think in the past, growth was the priority. But as the pollution in China becomes so unbearable that you cannot ignore environmental protection anymore, the government has to do something about it. I think we've all seen reports of toxic smog in Beijing earlier this year. And so you can see how serious the pollution is in China. So environmental protection is now really the priority for the government. The thing is, if you don't address this issue, China will become unlivable, let alone GDP growth. So environmental protection is a priority.
And so, any other themes?
This is a big theme: new economy versus old economy. But of course, this is not the only trade that we put on in the fund. Turnaround place is another theme we have in the portfolio this year. Although we are not particularly excited about the economy, but a recovery is still a recovery. There were a number of names that were derated big time in the recent down cycle, but they are now seeing turnaround. So we see actually a lot of opportunities in these turnaround plays. Turnaround plays actually account for around 15% in a portfolio. And so far, they have played out quite well.
List for me the 3 areas that you believe are going to be the places to invest in the future.
New economies like internet, technology, and environmental plays. Avoid the old economies that are subject to regulatory risk and fixed asset investment. Turnaround plays is a big theme in the portfolio as well. I think in a nutshell, we are not very index focused this year. In fact, our fund has done quite well year to date, despite a choppy market. I think that's because we are not very geared towards the index, and actually the index is still quite dominated by old economy stocks, and the new economy names are not that much captured in the index. So that's why you see a choppy index, but a good performance in the fund this year.
Tell me a little bit about yourself, Lilian. How have you come to be running a fund such as this?
I was the head of Hong Kong China Equities at Baring Asset Management before I set up this company. I worked there for 10 years, and it was a great experience working at Baring because I was given the opportunity to manage a fund that was less than 100 million US at the time I took over. And it was a $6 billion US dollar fund by the time I left.
That could be described as a successful track record.
I would say that it was a successful track record.
So Lilian, finally, tell me why I should invest with you and in this fund today.
I think we have developed a strong, a long enough track record, especially a track record that rides through the entire cycle, not just one particular year. I think we do not claim ourselves a bull market manager or a bear market manager, but I think I'm quite proud of the performance of the fund throughout the cycle, and so far we have been able to produce stable return every year, and we don't give negative surprises to investors so far. So I think we are quite stable in that sense.
Lilian Co, thank you very much indeed.
Thank you.